Good evening, everyone. My name is Inakshi Sopti, and I'm the Chief Executive Officer of the Asia Society India Center. I hope all of you and your families are safe and well and have taken the first dose of the vaccine, if not both. I'm pleased to welcome you all for the first session of our four-part series, Safeguarding the Present for a Sustainable Future, very generously supported by the Chatterjee Group Life Sciences Private Limited. As known to most of you, the Asia Society is a leading educational organization dedicated to building awareness about policy, business, education, and arts from across Asia on a global stage. Inaugurated in 2006 by Prime Minister Manmohan Singh, the India Center has hosted over 800 events, establishing itself as an important forum for the discussion of regional and global affairs. Our initiatives include policy roundtables, CEO forums, public lectures, leadership programs, cultural summits, film screenings, and our signature Asia Arts Game Changer Awards, bringing together art collectors, artists, gallerists, and dignitaries from the art world, celebrating and honoring Asian artists. Please do follow our website and social media handles to know more about the awards and other programs from across our 13 global centers. This evening, we focus the spotlight on the future of green banking and sustainable business investments in India. After a long period of irregular fervor, green finance is increasingly looking up post-COVID-19, with some of the biggest investors lining up trillions of dollars to finance a shift away from fossil fuels. Rightfully so, financial risks are being equated with impact on climate and sustainability. While India has emerged as the second largest emerging market for green investments, worth $10.3 billion, experts suggest that the country annually requires over $170 billion to fulfill the sustainability goals of the Paris Agreement. In its current state, the green banking sector faces various risks and limitations. There are transition risks, and even as banks support the need to shift to financing greener projects, they are unable to stop financing brown assets that generate profits for them. In addition, there are challenges with regards to financing green bonds and maintaining its attractiveness to foreign investors. However, institutions like the HSBC and others are changing this trend by earmarking dedicated funds for financing sustainable ventures. The ability of the sector to expand and continue to attract capital will depend on numerous factors. How international financial institutions help in developing a more supportive funding ecosystem for sustainable business in India. How Indian banks ensure a steady flow of capital in the long run for sustainable projects. And how policy planners and regulators support banks in extending credit to sustainable ventures. We hope to cover all these topics and more in our discussion today with our distinguished panel. Allow me to introduce our esteemed speakers. Satya Tripathi is Secretary General of the Global Alliance for a Sustainable Planet, a development economist, lawyer, and change maker with over 40 years of varied experiences. Satya is the Chancellor of the Kalinga Institute of Social Sciences, the world's largest academic institution dedicated exclusively to indigenous people and cultures. He's also a Senior Distinguished Fellow on Innovative Finance at the World Agroforestry Center. He served with the UN for more than 2 decades in key positions across the planet and was most recently the UN Assistant Secretary General, Head of New York Office at the UN Environment Management Group. Nick Robbins joined the Grantham Research Institute in Feb 2018 as Professor in Practice for Sustainable Finance, where he leads the Sustainable Finance Research theme. He's author of The Road to Net Zero Finance for the UK's Climate Change Committee and co-founder of Financing the Just Transition Alliance. He leads the finance platform for the Place-Based Climate Action Network and is co-chair of the International Network for Sustainable Finance Policy Insights, Research and Exchange. Rajat Verma is the Managing Director and Head of Commercial Banking for the Hong Kong and Shanghai Banking Corporation Limited in India, which covers a wide spectrum of businesses ranging from large international corporate clients, mid-corporates, and small businesses. Prior to this, he was Managing Director and Head Corporate Banking for the Bank in India. Moderating the discussion this evening is Kanika Chawla, who serves as the UN Energy Program Manager for the UN Secretary General's Special Representative and CEO of SE for All and co-chair of UN Energy. Kanika has over 10 years of experience in clean energy and energy transition policy and markets. Prior to SE for All, Kanika worked at the Council on Energy, Environment and Water in New Delhi, where she founded and ran the CEEW Center for Energy Finance and its renewable energy programs. A bit of housekeeping before we proceed. All those who are joining us on Zoom, please leave your questions in the Q&A box. And for our audiences on Facebook, please drop them in the comment section. A warm and sincere thanks to our outreach partners for this program, the London School of Economics Alumni Association of Mumbai and Western India. And with that, Kanika, over to you.
Thank you, Inakshi, for that very kind introduction and context setting. And when you have a panel as good as this one, it makes my job quite simple. So I think that it's really interesting that we have kind of the academic rooting, as well as the practice of building on the robust academic findings that Nick, you've been working on, and then of course we have the commercial banking rubber hits the road with Rajat, and then Satya, I think with all of your varied hats, but most importantly with your extensive work on nature, to really try and understand how do you make bankable what is traditionally always been perceived as unbankable. So I think that with all of that, we'll get right into it. I want to just piece up the discussion a little bit so that we can work through it in a few different ways. And I think the important part is to understand first what is green, and is financing green or financing green projects always the same as having green robust financing, which is consistent with the reporting requirements and financial disclosures that are now becoming more and more mainstream. So with that, I want to first talk a little bit about the part that we in India or in the Indian context, but more increasingly in every context in the world, we've definitely got right, which is a strong pipeline of green technology projects. And so what does that mean for, is it that what more needs to be done to kind of mainstream additional projects, and how do we make more nature-based solutions also as bankable as we've made renewable energy and other things? And for that, maybe we'll start off with you, Satya, to really just think about what are some of the barriers to making more mainstream or a more robust definition of what is green?
Well, I think there's quite a bit of work that has already happened, and I think Nick would be best placed to enlighten us on all the body of work that is happening, especially in Europe and also in other parts of the world, in coming to a consensus around what the definition is. Because green finance or the several different definitions associated with it is represented differently by different groups. And that's always a challenge, because if we don't have a common understanding of what it really means, then we all tend to take it in the direction we want to, and willingly or unwillingly make it possible for those, and that's a very powerful group of people with the money, to be able to greenwash. Because if there's no serious understanding of either the subject or the nuances, then of course you see what you see. And an example, there are numerous examples to be cited. The Bond Challenge, which was launched with much fanfare, 200 million hectares of degraded land to be brought back to life. And there's been serious commitments by countries and corporations. We have seen very little result. The New York Declaration on Forests, 2015, we've seen there was a study that came out at the beginning of 2020, basically tells us that people have delivered precious little on all the promises that were made. And mind you, these are some of the top corporations of the world. So the challenge is in really building on that understanding. Those that are in this space, those that really mean well, they simply understand it extremely well, but that's not enough. Everybody needs to come around. And so when we talk about the system, you have the supply side. Of course, there's a lot of conversation happening at this time where the momentum is building and the ground is shifting. There is indeed significant resources available to be deployed. And then, of course, there's the intermediate part of the conversation where you have reporting. where you have stock exchanges, so that both sides understand each other extremely well, so that for the lay investor, it is possible to understand what they're getting into. But the bigger part of the puzzle and the most difficult part of the puzzle, as we saw 50, 60 years ago when development finance became mainstream with ODA and everything else, you had a lot of money, a lot of well-meaning governments that really wanted to make a difference, but there's no absorptive capacity on the ground. It's very easy to build a hospital somewhere, but that's hardware. Unless you have the doctors, the nurses, the paramedics, or even a sense of hygiene in the community, how do you build all of that up? In the absence of that, we will spend too much time on the very difficult but yet easy part in the terms of the bigger scheme of things, and not be able to benefit from the momentum that is building on the intermediate space or on the supply space. So I think that's where the challenge is, in whether it's globally, but more specifically in India, which is in a very different space. And you've done a lot of work in this space, in the energy space, and it's very easy perhaps to quantify the benefits in terms of solar, because solar was 20 years ago very difficult. Now it's mainstream. We really need to take those learnings into agriculture, because India has 160 million hectares of cropland, which is pretty much dying. It's a broken system, and it will get much worse with the accelerating of the climate challenge and the falling of the dominoes. So I think that's where the challenge is, and that's where green finance needs to move if we are to really make a difference in the lives and livelihoods of people, which matters the most in countries like India.
Thank you, Satya. No, that's, I think, a very clear call for action. And I'll take that call for action to Nick now and just try and understand, how do you drive evidence-based practice in communities that have not necessarily participated in the generation of this evidence or are not as familiar with it? So how do we marry those two worlds, right? Because I feel like at this point, where, especially in the nature space where we're operating, there's a financial community, and then there is the community of the converted that kind of has the evidence, and then there are the practitioners. And there's quite little overlap still between these three communities. And how do we really bring them all together?
Well, thank you, Kanika, and it's very good to be here as someone who is an overseas citizen of India, but it's really a delight to be here and welcomed amongst you. So I actually have a financial sector background, although I work at the London School of Economics now. I'm a professor in practice. So your question is exactly what we do. We try and bring together practitioners, bring together communities, bring together financial institutions, businesses, trade unions, and so on, to actually think very hard about what green finance means on the ground, both in terms of financial returns, but also crucially, I think, as Satya has just highlighted, critically the importance for livelihoods and growth and development in a country such as India. So I think some of the things where we're winning clearly is on the sort of definitional side, the taxonomies. EU is developing a taxonomy. My country, UK, is. China, India. So getting those sort of definitional things, that's really good. And disclosures, those are tightening, and so on, and so which is great. What I sense is that there is quite a big gap between, in a sense, the sort of financial capitals of the world, whether that's Mumbai or London, and the real economy. And I think getting sort of that project development, developing projects, de-risking projects, getting them from the conceptual stage to something that Rajat and bankers can support, but also cautious pension fund investors can back, and so on. And I think, so that seems to be the piece. And I think we shouldn't underestimate the scale of the opportunity ahead of us. This morning, the International Energy Agency released its report on clean energy finance in emerging economies. And I was really struck that clean energy finance, so not including the nature finance that Satya was talking about, this needs to grow 7 times this decade. Yeah, so about 1 trillion. So this is a fantastic opportunity, fantastic one, particularly for countries such as India with so much good experience in this area. But this is not a smooth transition we're talking about. This is a rapid scale up. So we've really got to think systemically about that, and particularly what it means in key regions and key parts of India and beyond, let's say, the sort of the financial hubs. What does it mean in the real economy?
Thank you. No, and then those numbers are actually really, the numbers actually are increasingly becoming more compelling, both in terms of the volume required, but also the volume that is interested in developing countries. I mean, clean energy investments in developing countries are rising year on year and are now greater for several years than clean energy investments in developed world. But if you still see per capita or by population, only 15% of the world's power investments actually happen for where 40% of the world's population lives, right? And I think that that's kind of a good segue to take it to you, Rajat, in terms of, I posed this up front about what is green, but it's also really important to say, are we just incorrectly trying to bundle a bunch of things that are not at all in any form a similar asset class and call that all green? I mean, a nature-based intervention, for instance, for agriculture productivity and a power project, which is basically infrastructure, shouldn't even really, in my view, be in the power portfolio because it has no fuel cost. Should, just because they're both better for the planet, should they be bundled together? And so I think to you, how do you think about green investment overall?
Well, the politically correct view would be to say that they're looked at with the same prism in all banking institutions, but that's just not true. Banks today, and I don't speak only of HSBC, but the institutional bond market, for instance, is significantly more aware and focused on renewable energy because that's the big gorilla in the room. To give you some numbers here, I think the stock of all sustainable and green bonds and stuff is just about 1% of the total bonds issued in the world. It's about $1 trillion on a base of about 120 trillion. If you look at 2017, bonds were about 95% of all the investment into green energy. Today, that's in the Western world, it's about 70-30, but in the Indian context, it's almost entirely bonds. Banks are not financing in India, even renewable energy. So to go to the next level, a more difficult aspect of going into forests and sustainable agriculture, which banks will find it more difficult to understand. We're not there yet. We're not there on the solar power or the wind power, as yet. So I think it's a great opportunity, of course, but also I think it's quite an ambition for financial institutions to bundle all of this together. So in my mind, they will, whilst there'll be talk of bundling this together, I clearly see that a lot of the energy of institutions and their capital will go towards renewable energy over the next 3 or 4 years. And there'll be a period of continuum of time where banks are able to understand how to kind of intervene in other areas which perhaps are a little more, segregated away from the centers of capital finance, and how to engage with those.
Yeah, no, I think that's really interesting. I think it's also the opportunity is that is kind of because there are applications of renewable energy, especially if it is decentralized renewable energy, that can align with the delivery of other development priorities, including, sustainable agriculture or elements of at least sustainable irrigation, as well as for productive use, and so therefore the impact on livelihoods. I want to come back to this, but I want to introduce another element so that then we can mishmash the two a bit, which is around this enhanced attention towards climate reporting and climate disclosures, right? And it's fresh off the press this week that the G7 has made a very compelling statement on kind of the very strict guidelines that they're going to adopt on climate reporting, on how all finance must be green. There's, increasingly also a very encouraging announcement from existing large economies, but also large financiers that have traditionally done a lot of the coal financing to have moved away from that. And that's all highly encouraging. I want to come to you again, Satya, on what does this mean, though, for what we were originally saying are green recipients? Because if there is going to be much more on the supply side, let's say green capital, then it has to flow to new markets, right? Because I mean, there's really that many panels and turbines that you're going to be able to put into the ground. So it will have to find new avenues. So is that something for us to look forward to?
Absolutely. I think there are the kind of examples emerging in India that we should take great comfort from and great pride in. Let me take you back to your previous organization, CEW. We, in my work with the Sustainable India Finance Facility that we set up in 2017, the first project we supported there is a $2.6 billion project. To convert the entire state of Andhra Pradesh, which is about 60 million people and 6 million farmers, to zero synthetic chemical and pesticides farming, which is in some parts of the world, they call it regenerative agriculture, there they call it zero budget natural farming or community managed natural farming. What CEW found was that if you did this, you would be actually hitting pretty much each one of the 17 sustainable development goals. And then we did a follow-up study, again, with the kind help of CW, on the fertilizer avoidance. And we found conclusive evidence that people that are taking to natural farming, because now there is biometric data available, they're not buying fertilizers anymore. There's no evidence more conclusive than that. And then you extrapolate that to India. India actually spends about $13 billion every year on fertilizer subsidies, the national government, because it's federally mandated. And then that money, so if you wanted to convert the entire 120 million smallholder farmers with the 160 million hectares of land to zero chemical farming in India, it'll actually roughly cost you about $40 billion. That's 3 years of the subsidy money we just put on fertilizers. Forget the electricity subsidies, forget the other subsidies, the crop development and all kinds of things. That's about $50 billion you're talking about. So there is a compelling business case actually, both for the government and for the stakeholders to do this. That's the first point I wanted to make. The second is even more significant. KfW, the German Development Bank, that when I approached them in 2016, when we were setting up the Tropical Landscapes Finance Facility in Indonesia, which did the world's first private financed, massive forest protection program with the rubber plantation and WWF and everybody else, it's about $350 million project. And those lessons were then brought to India, and we set up the SIFF. They would, when I spoke to them in 2015, 2016, they said, well, we're not interested in this. We don't do this. And then when we ring-fenced the Andhra Pradesh program, not by putting any money or anything, we were just a catalyst as SIF and building a massive partnership under the leadership of the government of Andhra Pradesh and Mr. Vijay Kumar, who's the pioneer and the leader of the program. KfW came forward and put $300 million at 50 basis points coupon. Unheard of. Even if you take World Bank, take the best of the multilateral banks, they don't put money into these kind of things.
Yeah.
So it is possible. I think the trick is in building these virtuous partnerships where our ego takes a backseat. We stop being arrogant about, we know everything and we can do everything. Just work with a whole group of people. Now there are 50 organizations actually partnering with the government of Andhra Pradesh in this program. And we are seeing the benefits already. This year, they'll hit 1 million farmers. And actually, they have hit because they've already started farming. The latest numbers, if you add up, there are already 1 million farmers in this crop season. So that's what is possible. So it's about risk, all right, because all investments are about quantifying the risk and understanding how you're going to mitigate them and what's the reward and return. But if you bring in virtuous partnerships into the mix, it is actually possible to make it happen. And lastly, there was a question on this mitigation. Are we spending too much time on mitigation? We are. For the last 30 years, we've talked about mitigation. You cannot make this case to the government in India, to the politicians or the people, when the average Indian's per capita footprint is 1.9 tons per capita. The ideal footprint that science tells us is about 2.1 tons per capita, and the global average is 4 tons per capita, and then countries like the US that have 16 tons per capita, how do you convince the Indian that you need to act? Because they're already under the ideal footprint. But again, if you turn that argument on, India is doubling every 8-9 years. So even if they're under 3 gigatons now, by 2040, they will surpass every other country because others would have peaked and their emissions would start falling. So that's why we really need to focus on adaptation and really train all our guns on adaptation, because that's about people, that's about the air we breathe, that's about the contaminated water we consume, that's about the chemically saturated landscapes we draw sustenance from. So that's where I think is the most powerful argument is in terms of making a difference.
That's actually, I think, something that I would like to take almost immediately to you, Nick, because I think that in the existing monitoring and reporting requirements that have now become a part of financial regulation, finally after years of a very well fought fight, does it still, though, reward some of these elements that Satya is saying, or is it really focused on emissions avoided, emissions abated, or does it take a more robust look at what it means to drive climate action at scale?
So no, really good and really good listening to Satya. I mean, I suppose in the last week, we've had these sort of two big announcements around disclosure, and disclosure is a useful tool. It's not going to necessarily solve the problem. It's necessary, but not sufficient. So clearly we've had the G7 nations say they're going to make the Task Force for Climate-Related Reporting mandatory, the TCFD. China has come out and says it will do the same. So I think the ball is in the Indian government courts to see whether what that will do. And that deals with both the transition issues, the drive down for net zero, as well as resilience. And I would say also needs to include just transition. So actually, what is the impact of this process on workers and communities and so on? So that is coming. And then obviously we've had the formal launch of the Task Force on Nature-Related Reporting as well, the TNFD. So we have these two ships now sailing. Now, clearly, disclosure and including disclosure requirements through SEBI for business responsibility reporting, that really hits the big corporates. But let's think about some of the listed companies such as HSBC, the listed banks, because the disclosures I think that the market investors are going to want to see is actually, what does that mean actually for the broad base of your client base? Yeah, the big corporates, yes. The SMEs who are the heart of the economy, your consumer base. What does that mean for the mortgages you're providing? So I think disclosure is important, particularly for the big corporates. But I think the expectations that investors have, particularly also for banks, is actually how the loan book is being aligned with these variety of goals, climate goals, just transition goals, nature goals, and being quite specific about that. And that is now being benchmarked, particularly by global investors. So I think disclosure is important, but it's not just disclosure for disclosure's sake, because it is about the allocation of capital. It's about capital allocation that we've talked about before. Thank you.
Yeah, and I think that's while in principle you're absolutely right that it's going to be something that will be demand driven almost, where investors and consumers and everyone is going to demand a greener loan book, or will reward a green rating or a green certification. But is that really true, Rajat? I mean, you were talking earlier about the bond market, and we've heard so much about green bonds in India as if they're going to be, the silver bullet that will mobilize debt, and the reliance on banks and NBFCs will go down for renewable energy projects, etc. But that's really not how it's panned out. I mean, to raise green money, you have to go to bond markets that are outside of India, because you can raise bond money in India, but I'm not sure you get any green premium. So is it really worth it, or is it just a bit of a headache and a cost? So how do we drive that behavioral shift for the community at large to kind of place a green premium?
Right. So Kanika, the data on green bonds versus other bonds of a similar credit rating says that they're marginally cheaper. They get some sort of a premium, it's not much, and the demand for such loans is marginally more, maybe 15% more on the book basis. So it's 3.7 versus 4.3 or something like that. So there's but what you're seeing is that has been changing quite, all these changes happened in the last 1 year or so. I think this will find its feet. Just the green loans and the renewable energy space will find its feet, because banks are now coming to start financing it, and you're seeing this shift that has already happened in countries like UK and US, where I think over the next 4 or 5 years you'll have banks financing 40 to 50% of their book and bonds financing the rest, which is how it should be. The larger point that I wanted to share around this is more around sustainability linked bonds. So, you've got renewable companies, but you've got a whole ecosystem of other corporates who now have certain reporting requirements that have been, thrust upon them. And therefore, they're trying to get to grips with it and trying to see how they can use that. The first sustainability linked bond for a company in India was done with involved us as well, very recently, a few months back. That was the first sustainability linked bond in the country. Now that itself was amazing to me. And speaking to a group of 40 or 50 corporates very recently, I found that other than green companies who are clearly aware of what the investor set who's interested in it, who's a green investor, who's a light green and a dark green investor, and so on. But other companies just don't know that this applies to them. So there's a massive journey to take before people understand that this is not just about emissions, but this is about better use of water or land or all of those things. And as of now, that understanding is not there. I would say that at least in India, I would say that it's a very large majority of companies do not understand this, and therefore perhaps some sort of a directive policy or certain other things are required than just framing the policy, or that'll find its feet and people will start understanding it, but you got to accelerate that process of understanding. So that's clearly a felt need that I experienced with our clients.
Yeah, no, absolutely. I think that's so important, because it's often that we have the good intention policy and then nothing else, right? And then everyone is left to kind of figure it out as they go along, and that's a way too. But I just feel like, given with 9 years to go to realizing the SDGs and the Paris goals, and there's no way that we're going to get to net zero by 2050 if we do not end energy poverty in all of its forms by 2030. And that's kind of, academically proven, but increasingly it's becoming also very much a political economy question, right? And it goes to Satya's point earlier is how do you have no political capital to make that ask if the rest of the world doesn't really step up, and it's kind of all interconnected. But I do want to still bring this back to domestic policy a little bit, Satya. And I think that at the domestic national policy level, we've had some really big wins, right? In India, there is, of course, the very large renewable energy ambition, but there's also been, on the floor of Parliament in a budget speech, mention of, sustainable agriculture. There has been the interlinking of agriculture and sustainable energy. All of this kind of at a very high level of policy making, these signals have been sent out. But then, like I was saying earlier, the regulation hasn't always kept pace. And so I think the last question I want to pose to all three of you, and using your very specific perspectives on this, is what is the role of central banks? So the RBI, of course, as it put out in its annual report, now recognizes climate risk as a major issue. And it is making the first moves to sort of start participating in some of the global processes, even though it hasn't really conducted any stress tests yet. But it's not just about, the regulation that it sets in terms of financial disclosures, but also what it does in terms of identifying priority sector lending areas, what it does in terms of also recognizing, the classification of different kinds of investments, and then the sectoral lending limits and kind of how prohibitive or not are those. And then finally, I guess that the piece of the RBI to also drive some of these behavioral nudges, right? In terms of the large investors, whether it's domestic pension funds. I mean, in India, we talk about institutional capital as if it only exists outside of India. But the Indian institutional capital is really hard to budge. It's really hard to even get them to talk to you when you want to talk about green, right? So Satya, to you then first, and then we'll follow the same order and then open it up to questions. Satya.
Thank you, Kanika. I think the challenge for the RBI is, of course, a question of how much it drives the agenda itself and how much it follows the agenda, the broader agenda, policy agenda of the government. And so that's a difficult question to ask and answer. But globally speaking, a lot of the central banks have really pivoted on this. And they're sending out the right signals. If you see the European Central Bank and the Federal Reserve and others, I think there's very strong signals coming out that possibly green reporting on the stocks and flows of nature would become mainstream in a few years. And I think the TNFD and the TCFD are all great efforts in that direction, because you really need to pin down the metrics before you really make it mandatory for people to report. Otherwise, everybody starts reporting in their own uniquely creative ways, and it doesn't lead to much. As a good friend of mine told me recently, and he's a very influential voice, but I don't have his permission to quote him. He said the road to nothing is paved in great conversations. So a lot of people get together, they have great conversations, and it leads to nothing. So that's the challenge. But I think the bigger opportunity, as I see it, is in the world understanding that when countries like India, which is pretty much 1.4 billion of the population of the human species, and has 21 of the 30 worst cities in the world in terms of air pollution, and it has significant challenges in terms of the living space for people, and things where people would actually respond to you very fast if you did something about it, whether it is the government or people that. I'll give you two examples. The Prime Minister announced at the UNCCD COP that India hosted 2 years ago. He actually made an announcement that India wants to pivot to zero budget natural farming. And he said that in front of world leaders and almost everybody who works in this space. Ideally, 10 of the top world leaders or whosoever is advising them should have picked up the phone and talked to the Indian government the next day. Yeah, that is fantastic. What can we do together? None of that happened. 2018, World Environment Day. The Prime Minister of India announced that we will ban single-use plastic by 2022. And then he actually went ahead and started making policy shifts. And then he backtracked. Ideally, the world should have really stepped up and said, that's a phenomenal commitment you made. What can we do together to really shift the conversation and shift the action? So I think, we need to look at these signals much more seriously. And when that doesn't happen, these are seriously missed opportunities. You mentioned about the budget announcement. The finance minister 2 years ago in her budget speech announced that India will be supporting ZBNF in a big way. Within minutes, the fertilizer stocks, actually they dropped by about 12%. That's how powerful these signals are. But we need to capitalize on these signals. And if you don't, then of course, these are tremendous missed opportunities for the planet as a whole, not just for India, because India is not in this by itself. And lastly, the opportunity is here now. All that optimism about COVID saving us from the climate nightmare. Just yesterday, NOAA came up with its latest data from the Mauna Loa Observatory. We're at 420 parts per million. Last time we were there was 4 million years ago, and the sea levels were 25 meters higher. And now, of course, people then ask you the rhetorical question, why aren't sea levels 25 meters higher now? That's because we've pulled off this amazing stupidity in only 100 years' time. So it will take a little time, but we'll get there actually if we don't act.
Thank you, Satya. That's again, like I think that maybe we should, in the next round, get you to go last, because it's always a really high point to end the discussion. But I am still going to, while I completely agree with you about this needing to be collaborative, I do still want to unpack the role of central banks a bit more. I see what you're saying about kind of regulation and institutions not keeping pace with policy announcements. And so, Nick, it's really important then, given that you have quite a broad purview, is how do we separate the grandstanding from what will really drive the shift, right? And is the central bank then a critical lever in doing that?
Well, Gana, this is great. This is my favorite subject. We work very closely with this group called the Network for Greening the Financial System. This network is not set up by Greenpeace. It's set up by the world's central banks, and it's great to see that the RBI in India is now part of that. 90 central banks recognizing that climate change is a systemic risk. So I think why central banks are so important is obviously we need to have all the right policies and mechanisms on the real economy side, energy policy and so on, but we also need the financial system to be fit for purpose. So there are many problems in the financial system: short-termism, lack of information, inappropriate thinking about risk and so on. So central banks are absolutely key. And I think particularly in an economy such as India, actually probably potentially more important than an industrialized country. So what can the central bank such as RBI do? Clearly, monetary policy. So actually understand how is this shift to a net zero resilient economy, which has so many benefits for India, how is that going to affect the macroeconomics and particularly price stability? Well, we know the basket of goods is very, very environment and transition focused. So thinking about that, thinking about the assets it buys, if it's buying corporate bonds from the market and so on, what criteria is it applying to those purchases? Monetary policy, absolutely key. Then prudential policy, and particularly supervising banks and so on. What expectations should boards of banks have in terms of their risk management? How should they be managing their climate risks? What should they be thinking about in terms of different scenarios? Stress tests is perhaps the next step that they could be going through. What is that going to mean for their loan books? And then there are specific policies, clearly, as you mentioned, the priority sector lending. Obviously, that has been introduced in India many, many years ago to ensure that actually the banking sector was linked to India's development priorities. How could that be updated in light of what we've been talking about? There's been little changes at the edge, a little bit about renewables and distributed and so on. But they're little things. So how could that for the next 30 years? How could that be upgraded to support the resilience, the net zero, the clean energy, and so on? And then the scaling up. So in my country, the UK, the Bank of England, and other regulators have set up a sort of climate risk forum, one of these famous sandpits that people seem to like in this area. And I think that would be a really good idea to actually start thinking about some of the tools and mechanisms. How do we bring together India's digital finance expertise with this green financing? How do we get these things going? So I think the central bank absolutely critical. And if I may just pick up on one of the points kind of you were saying earlier, I think that one of my great disappointments looking at the Indian green finance scene is actually asset owners and asset managers. If you look at the signatories to the PRI, there's only one really leading Indian asset manager, SBI, which is great to see them there. None of the big insurance fund companies, as far as I can see, are signed up. And so one regulatory proposal, if I may, as a Farangi, is that alongside the business responsibility reporting, there should be mandatory investor responsibility reporting. So all the big funds, all the big asset owners, the insurance companies, they should have to actually start reporting on how they are applying climate risk, and particularly to their clients, the end people who have their pensions. They need to know, they have a right to know how their money is being invested. So I think that if we can close that gap, bring the asset owners, the domestic Indian asset owners on board, then I think we can make a big progress. Thank you.
No, I think, Nick, you're exactly right. Because if we did do an analysis of kind of the exposure that a lot of the pension funds have, the GIC and LICs of the country, it would be frightening to everyone who puts their money into that. And it would be frightening to themselves. But, this kind of bury your head in the sand and then everything will be okay is not going to last. I mean, I think that is really the big risk that we are completely overlooking, is the kind of exposure that these big insurance companies are sitting on. But Rajat, to you then, and I think that, I kind of, a big part of my question at the start was actually targeted to you, but to kind of say, as a commercial bank, is it because of, or is it in spite of RBI guidance that you do green work?
And no, we do green work because we want to do it. And institutionally, the tone has been set right from the top, as you know. So without getting into more about HSBC's philosophy, which is really committed to the idea itself as opposed to regulation change, I just did want to make a few comments, Kanika, on the role that the regulator can make. I agree with everything that Satya and Nick have said. The regulator in India is a very powerful and respected regulator by financial institutions. Clearly, moral suasion has worked very well in several aspects of Indian banking. There's no reason why it won't work here. I think for this sector, you also need direction. Just moral suasion perhaps is not sufficient. So you need perhaps certain directives that the RBI could give. Perhaps banks should be asked to print what percentage of their portfolio is at risk because of climate change and include that in stress tests, perhaps. There are various means to get around to doing that. And I think the last thing that the RBI should do, which is the tool, certainly it impacts the whole banking market, because the RBI has 40% of all assets into priority sector. So that's a great incentive that if today there is certain part of green energy or green financing that could qualify, but it's very small and it's very limited in the way that it can be used. So I think the RBI can moral suade, can direct, and can incentivize. It's got an absolutely pivotal role. And if Indian banks have to succeed in this, they're not going to succeed without RBI's help. That much I can tell you.
I'm actually going to just start taking some of the questions that have come up, and I'm going to, just in the interest of time, because we have a little over 10 minutes to go, I'm going to start bundling some of them. And actually the question, I think we'll start with you, Rajat. The first few questions are kind of around commercial banking and around retail banking, actually, and the role of retail banking in, maybe it's not a mandated role, but if you were to be proactive, what can banks do in the retail side to really incentivize, for like pursue more green options, whether it's on vehicles, whether it's on housing, whether it's on even home improvement with the form of solar rooftops, etc. So is there something like quick and easy in terms of an instrument that can be offered by banks?
I think for SMEs, probably more than for retail. Small SMEs, certainly you can have incentivization for rooftop solar or EV purchase, etc. And products can be devised around that. I think we're probably a little far away from that because, rooftop solar, etc. is very small in India as yet. But yeah, conceptually, that's a possibility.
I see that there's a lot of questions about renewables, which I, despite really wanting to answer, I'm going to resist the urge and keep this a bit more broad to green overall. And I guess one of those questions, then I think, Satya, you already partly answered it, but I'm going to give you maybe like a quick 1 minute to augment your answer, is around what is the kickstart to the renewable sector came very much from very strong policy signal. And while there have been policy signals which you yourself identified on other aspects, why has that uptake not been as much? And is it because the sector is just less bankable, or there's less familiarity, and kind of what is the role of regional rural banks and things like that? So it's kind of a catch-all question that I've asked you, but over to you.
Thank you, Kanika. I think there's a telling example from India that I would like to share. Before I came back to the UN in the last installment as their ASG, I was working as the chair of the Sustainable India Finance Facility, and we partnered with the Ministry of Petroleum and Natural Gas and Biofuels. So the minister was very keen that we capitalize on this opportunity of crop biomass burning. like any disaster, it always presents an opportunity. So it's about 20 million tons of crop biomass that gets burnt every year in different states of North India. And that's a tremendous opportunity given the fact that India imports significant quantities of natural gas, apart from the fact that it produces itself quite a bit, but it imports quite a bit as well, almost 50%, if I am not mistaken. So there was a great opportunity. And then, of course, we discussed at length, numerous conversations with the industry, with everybody else. And in a very collaborative way, the minister very kindly took to the idea that unless you have offtake guaranteed, you can't catalyze a non-existent industry. So they did a program called SATAT, and the Safer Alternative for Transportation Fuels and all, launched on 2nd October 2018. So I came in as the ASG of UNEP at that time and launched it along with the minister in Delhi. Great program. It actually pays you 20% more than the retail prices on the market for natural gas if you were to take the crop biomass and change it into fuel, bio-CNG as they call it. Not a single one has been catalyzed so far, despite guaranteed offtake, because there is complete absence of risk capital. So they went through a process of inviting interest. They have 1,000 people lined up, ready to do something about it. Not a single one has had financial closure. That's how difficult this is, because as Rajat rightly pointed out, it's all the bond market. There is no risk capital. Nobody is willing to put equity into this. And of course, now at the Global Alliance, that's why we thought that this is a $30 billion opportunity. You need to break the back of the entire value chain. How will you pick up the crop biomass, because it's only a 19-day window? Where would you store it for the rest of the year? What local regulations? It's complex, but nothing that we haven't done before in other sectors. And if you pull it together, you start with just 10 or even 100 and show how it works, you will catalyze the 3,000 that is possible. And that's a $30 billion opportunity sitting right there for anyone to capitalize on. And so there are these opportunities, but they're going a-begging because of lack of risk capital. And that's where we really need to make things happen. And we're working now with the Green Climate Fund, with the Government of India, with Niti Aayog under their leadership, and a lot of other actors. Yesterday, I was talking to Senator Chris Coons, who chairs the Senate caucus on climate solutions in the US. We're trying to catalyze a $10 billion climate adaptation fund for India in partnership with the Green Climate Fund and others. And primarily because of this, you really need the risk capital that will catalyze opportunities that are sitting there on the shelf, really waiting to happen. So there you are.
Yeah, no, I mean, that sounds like a really, for the lack of, a more polite word, frustrating story, to be honest, because there is global public capital. It doesn't even have to be domestic public capital that is meant to be doing this, that's meant to be catalyzing, and it's obviously not.
And it's not charity, it's investment.
Exactly. And I think that this is not a good signal for the very ambitious targets that have been announced on this World Environment Day just last week. But I want to take a question that's in the chat to you, Nick, on what are the other countries that India can look to as kind of a case study on that are similarly positioned on a climate risk perspective, but also from a financial climate risk perspective. And so what are really the learnings? Because everything that we're seeing on the disclosure side, et cetera, is coming up very much from the global north. And so is there, where can we learn what to do or even what not to do?
Yeah, I think it's really important not to reinvent the wheel, but I think equally, it's really important for India to develop a really genuine and authentic approach to sustainable finance from the bottom up, and it's great to see the Ministry of Finance leading on that as well. So I think, yes, there's lots that can be learned from other countries, whether that's Also, countries such as China, which has clearly been very strong on green finance. There's a very, very different capital markets, very different political system, obviously, from Europe, and so on. But I think the key thing, I think, is, as we've discussed, is really seeing sustainable finance as a driver for development and about actually moving the real economy. This is not a sort of separate satellite that moves around, but actually how do we get the trillions in the financial system, whether it's the banking sector, the asset owners or whatever, actually pointing in the right direction. And we know when sort of green sustainable finance is taking off is when the cost of capital starts changing. So lower cost of capital for more green aspects because they're lower risk, higher cost of capital for the reverse, and also the volumes of capital. And I think one of the big issues, particularly maybe for international focus, and I think Sachin touched on this, is clearly India has a relatively high cost of capital. I mean, this is a real issue. And the sort of the net zero transition is more capital intensive. We have more capital up front for renewables, we have less energy consumption. So actually it becomes potentially more of an issue for countries such as India, that we're moving into a more capital intensive type of economy. So we're actually going to need more capital. We're going to need more capital, cheaper capital. So I think that then does focus on the role of public institutions, development banks, and those equivalents in India. But also really trying to find ways of constantly reducing the cost of capital for green. And the sustainability-linked loans and sustainability-linked bonds, which Raja mentioned, are a really good market mechanism for rewarding companies for delivering on renewables targets and so on. So I think constantly thinking, particularly in a country like India, how do we keep reducing the cost of capital for green? That's a really important focus, I would say.
I'm going to pose one question, which is kind of, what I've taken away from the really engaged discussion in the questions that have come forward, and kind of just whittle it down to one thing for you, Rajat, is if you had one ask or maybe two asks, what needs to be different for there to be much more green commercial capital out there and for the whole range of green activities?
I think the availability of capital is probably not my biggest concern. I believe that the knowledge flow and information flow is probably the biggest barrier at this point in time. And I think the policy setters and think tanks have a really important role to play in that. No bank is going to finance something, or they shouldn't either, in my view, shouldn't finance something which is not financeable. So that's not. This is a commercial activity. If it's going to be trillions of dollars, it can't be CSR. So it is a commercial activity. So I think there are commercial use cases of this, but they still have to be fully thought through and developed. So my one ask really would be that the policy is more or less in place, or the definitions are more or less in place, and the kind of the setups there, but it's not widely known and widely understood. Either by corporates or by banks, and if that gap needs to be fulfilled, otherwise we'll lose a couple of years in this decade.
A couple of years we don't have. So to partially respond to that wish, and to again invoke where I used to work previously at the Council on Energy, Environment and Water, there is a Center for Energy Finance that actually does a valiant job of attempting to bridge the information asymmetry. And they put out a lot of market intelligence information to really kind of bring down the perceived risk of clean energy markets, of course, limited mostly to renewable technologies and mobility. But, increasingly, I think Satya's given us all this kind of greater renewed vigor to pursue other elements of the green and nature investment scale. So with that, I'd like to actually really thank the audience for being so engaged. There's been a lot of questions, and I apologize for those we've not been able to cover, but I've tried to kind of group them together. And I'd also really like to thank Satya, Nick, and Rajat for a very candid and honest and open conversation. I think that, as Satya, you said, the road to nothing is paved with good conversation. I do hope that this one actually leads to something, but at the minimum, we've got the good conversation part done right. But I think that there were some really good recommendations that came out, especially especially around thinking about what is green, because the default setting is to just think about renewables and now electric mobility and battery storage, but to think about it in a more comprehensive way, but also for perhaps policy and regulatory levers and signals to institutionalize some of the other green sectors so that more capital can flow into it. The second piece that I think we discovered and we unpacked quite a lot is around capacity building. And this is capacity building to also to make investments, to make more green investment decisions, to have access to additional information, to understand the impact of certain projects, especially the ones on the adaptation side, as Satya explained to us. And then finally, on the role of central banks, where I think Nick gave us a really clear roadmap of some very specific questions that the RBI should reflect on. And I'd actually urge the Asia Society of India to share this with them. Perhaps they will be slightly, if not completely agreeable with some of the recommendations that we've put forward. And finally, I'd like to again thank everybody as well as the Asia Society India Center for inviting us for this really engaged conversation. Thank you.